Good morning, everyone, and welcome to the European crossover webinar. And we saw a pretty big rally here in the dollar yen in the Asian session. If you're with us, you're able to go in and catch a little bit of action on that. We talked about that 614. I know in the chat rooms we also discussed the 614 and the 630 in the chat rooms. Let me see. And we'll take a look at what news we have. So, this is one of the things that I cautioned yesterday when we were in the, not yesterday, but a few hours ago in the Asian session, as the dollar yen was making those highs, I was cautioning about that 614, which is a key level on the 2-hour, which I posted the chart. We can go in and take a look at that. And the key was, and I tweeted that also, was the actual close of that level, and we faded from that rather quickly. Actually, if, I mentioned the 630, and if you shorted anywhere in the 620, 630s, whatever, right in there, you caught yourself about close to 80 pips. But yeah, that's one of the things I cautioned, was saying, hey, look, be ready to cover on the dips, because as we go into a Friday, this kind of close is really going to look very well. Now, we're pulling back a little bit here in the dollar yen. We went right back up to the 614. Looks like we may have taken it out by 1 pip, and we're off about 30 pips right now. So it says the yen hit a 3-week low against the dollar on Friday, was set for its biggest weekly fall in 17 years after data pointed stabilization in the Chinese economy, boasting global risk sentiment. We're going to move into the charts quickly. Won't waste a lot of time on this. It's pretty obvious. Today we have CPI coming in and Empire State manufacturing, retail sales, that'll be pretty key. I for a little bit of a swing. And we have University of Michigan, also industrial outputs and capacity utilization. That'll definitely move the needle. I'm saying in all, not just the industrial capacity utilization, but I mean, if you look at everything in total, CPI, obviously retail sales is going to be huge, and then you've got industrial production capacity utilization, by University of Michigan sentiment. All these will, make the markets get a little push on this stuff here, but we're going to move into the charts. Wow, Visha says, PayPal, I caught your call in Asia. I booked 50 pips. Great call. Well, thank you very much. I wasn't able to catch a whole lot on the downside. I was so doggone tired. I was going to go to bed, and I just happened to come back because I remember Blake saying something about, he did post in the chat room, he was saying about being hedged for Asia. And I don't generally even trade Asia. But then I saw what the dollar yen was like, this thing started to creep up. And I did post the Chinese data, and I was still going to go to bed. And then I was like, I can see the dollar yen. I go, wow, this, I was hoping, oh God, I hope I'm not going to have to stay up. But like I said, after we got up to 106.30, and we were trading, I think we dipped to like 106.17, and then we're back right there at 106.20. And I was telling people, hey, you got to watch this close. On the 2-hour chart, which is really only about 10 minutes away. And obviously, we faded pretty quickly, immediately right after that. We're really going into that close. And we'll go into the charts. But I was I did all right, not too bad. Holy smokes! Natish says, "Hey, thanks, Paulie. On the dollar yen, I went short at 630 exactly and covered at 570. Holy smokes! Yeah, you see, by the time you were covering, I was already, you know, conked out. So let's go and move into here. Yeah, the way I trade, and I've told you, I know last Friday there was one guy that was a new listener. We'll go move right here into the dollar yen. I posted the chart. Now, like I told you before, I go with the touches. I mean, the overall touches. I don't put I'm going to say it again, sound like a broken record. I don't put my resistance levels at the high and the low. Who the F bought the damn low, and who the F sold the doggone high? That's all bullshit. You know what I'm saying? It is. It's all bullshit. Look, you got to trade where the touches are. This is where you're going to go in and see where other people are coming in. These people that put their resistance here and they support, those people are dumb as a frickin' box of rocks. They don't know a doggone thing. Look, the only time that you want to use those is in a fast market. And we shared that yesterday about the cable. In a fast market, then you'll see the market, like let's say that the market started, selling off hardcore. Then this is where you see something like this, like that. You see, and you go, oh wow, they're going to try and tick off this previous high like that in a fast market. That's where it's going to make a difference, okay? But unless you ever clipping along, what I'm saying, in a fast market where there's a release and they're swinging back like crazy, that's where you want to go and use that. But you want to do it against the touches, because this is where you're going to see the real volume. Because you can't, when we got above, I said that, in the webinar yesterday, we were talking about the 614. And, I just, say, hey, look, they'll probably get around 630-ish, okay? And my thought was, because I thought, okay, they're going to blow some stops above 6, okay? And we'd actually backed off again, yesterday. But, they came back again, with a vengeance. And my thought was, okay, look, they're gonna plow through 6. They're gonna want to, because when they were coming back up, I was telling people, I think I tweeted that out, or I said in the chat room, hey, look, they're trading 580. I go, they want 106. So they're gonna take out those stops, and we have 106.14 as a key level here. But they're gonna overshoot. I mean, David, if you have to think about it realistically. You think, okay, if they're gonna hit those stops, good, I'll short into it. But are you going to put your level like it to get in at 607 or 608? No. They're going to run through it. And let me see. Yeah, Mario says, what about the euro dollar? Well, we'll take a look at that. And that's a good example, because I'm going to compare it to the yen. In the same example that I'm making, is if you say that, then the market's going to push back above it. Because here's what's going to happen. Is nobody wants to get in the way of it. You see, nobody's going to want to get in the way once we took out 106. So you have to let it go through and see where it starts to tire. And you pick out your levels where you think. Now, obviously, like I said, according to this, we were looking at 614. And the way we came up with 614, was you see here how the market rallied and it closed right here. See, the close here might have been like 613 actually, if you move it just a hair lower. Right there, okay. You see, I go with the close right here because that's the actual body, okay? So I'm more interested in the body or the touches. When I say the touches, I mean the most amount of touches. Like, I'll give you an example right here, like this. You see this body close here? And I try and get the most touches. You see? And then I try and pull that out. Okay? Like that. You see? So I try and go with the most touches because there might only be one body there, or two bodies, whatever. I try and go with the most touches. You see the same thing here. You see, I'm trying to line up the most touches. The market went back, when you dipped even lower, but what you're trying to see is how is the market holding up against this level. So that's why I had the 614, and I saw the zone here. You see the bottom here being ticked off here, and then we tried to reach up, which was previously support, is now resistance. That's why I ended up coloring the zone. I'm thinking, okay, we're into this zone. I don't know, maybe we can try and stretch them up here to the top, but I try and see if I can see a confluence of touches. There's not a whole lot here because everything was happening, but you can still see that there's some decent volume in this level here around the 614. So, okay, we're going to go and overshoot that. So that's why I came up with the 630. And my thing was not necessarily 630 on the dot, but I pointed out 630-ISH, 630-ish, because my thought was I'll probably make it to 25, maybe 27, so they'll probably run out of gas around 30-ish, meaning it could be 28, it could be 32, it could be 35, maybe even 38. But the key was, and I stressed this last night, and it was on this bar, and I said, right before the market closed, there's only like about 12, actually when I treated that out, it was about 15 minutes before the market closed. I didn't even realize it was at that point where the market was going to close. I mean, we were only a few minutes away from the close. And we were trading right up here. We were trading at we already hit 630, and we were trading here, and we finally dipped to about 17. And it popped back up and was trading here around 20, 21, maybe 22. It was just sitting there at 20. And I said, I reiterated the 614. I said, it's going to be, because I said, watch this price action. And I said, what's going to be key is the actual 2-hour close. And the 2-hour close, which I really wasn't paying attention to at the moment, when I said that, the 2-hour close was only 15 minutes away. So, but at that time, when it was already at 20, it was already like about 10 minutes before the thing closes. And I know if we're going to hang on, and I was really tired. I'm like, hell, I got to still get up to do the webinar. I won't have anything left if I try and stay up all night. And, but obviously what happened was, now this is the close. And it was trading here at 620. Within that short amount of time, the wheels fell off the caboose. I mean, look here at this close. That's 576. So within that short amount of time, we basically we dropped, just from that level, we dropped close to almost 50 pips. So that, and Matthew says, how do you derive your levels? 1 year, a couple of years? No, it's the touches. It makes no difference to me how far back or whatever. It's where the volume is. Now, if, excuse me, if, let's say the dollar yen were to fall into 96, 97, then yeah, I really got to back up the truck and come all the way back here to find something. I got to go in and load up the data. This is why I use DT and IQ Feed as my data provider. Now, I did have a hickey yesterday on that feed. I'm saying for whatever reason, there was something wrong with the site or something, and I had to reload. And remember, I loaded up all the other TD Ameritrade charts. But then I was able to something happened to the site, but it went back online. But you see what I'm saying? With this TD Ameritrade, my DT and IQ feed, it has 20 years worth of data. So I can really go back a long ways if I need to. I'm looking at a 2-hour chart, but if I need to, I can back up the truck quite a ways. So that's where I come up with these levels, and I come up with the touches. Now, as I told you before, then I incorporate the use of Fibonacci to heighten my probability. So I'm looking, okay, 588 is 88%. We actually had it over here when it was 78%. But remember, they fell back and they're reasserting themselves. So I'm trying to figure out what area will I see the most action, where if someone's looking at a fib, they'll say, okay, let's see what happens. And also another level and another fib. So technically this market could have maybe even, and it could, still make a run up here to the 662. But it doesn't mean it will. I'm just saying we already had a pretty fabulous run. So where can I look for the market to run out of gas? Because I'm just trying to scalp it. I'm not trying to call. I don't look at, Frederick asked if I look at 4-hour charts. I don't look at 4-hour charts. I look at 2-hour charts, and I've already said why I look at 2-hour charts. I'm a day trader / scalper. I can't stick around and wait. Look, here's a perfect example. I was telling y'all, hey, look, I want to see how this thing closes at 614. If I was looking at a freaking 4-hour chart, I would have had another 2 hours and 15 minutes to go. So you can see the significance of using it against the 2-hour chart. So anybody that was still trading right after I posted that, and they started seeing this market slip, they probably thought, wow, the 614 is going to hold. Let me get short. Or like Natish, he sold it against the 630, and he rode it for quite a while. Oh, you know what? Frederick makes a very good point. Frederick says, I'm confused. That's a 4-hour chart. You know what? Props to Frederick. I think I had to use this to go back further. Wow, I didn't even realize that. Yeah, here we go. I'll be doggone. Well, hold on, it's probably going to be, you see it's loading down now. I think I had to go back to find the data, so let's go pull it back. So well done, Frederick. But yeah, because you're saying, well, I'm confused. That's a 4-hour chart. Well, doggone, you're right. Yeah, I had to go way back to find support. So I think I had it, and I just forgot to flip it to 2 hours. But it's still the same thing. You see what I'm saying? You're seeing the same thing here. Nothing changed. You see the close here? It's still 614. You see, sometimes they'll match up. Sometimes they'll match up, but it was still going to be the same key thing, 614. You see? So, like I said, I can't wait. Like here's a very good example. Let's put this back. If you waited for the 4-hour, you're kind of like, okay, let's see what happens. Okay, you see this right here? Now look at it on the 2-hour. You see that? You've got a long-legged doji. A long-legged doji I'm talking about right here. And the reason I ended up, because if the data is too far back, I'll have to use a 4-hour chart. And that happens a lot on those TD Ameritrade charts because it'll only go so far back so far, so I might have to use a 2-hour chart for that, okay? But anyway, if you look at this, this is a long-legged doji, meaning the market is running out of steam. It's losing its momentum, okay? And then at that point, you have an opportunity to get short and see what happens, and you can see the market completely, totally falls apart, okay? You basically, right here, you have a nice little hammer bottom. And that's my whole thing is with on the 4-hour chart, I can't wait around for a 4-hour chart to give me a signal, because lots of times I'll look, just like I talked about the Dalian, I said, watch this close at the 614. That's going to be very key. And so if I have to wait for another 2 hours for a 4-hour close, then it's a good opportunity. I'm a good opportunity, but a good chance I'm going to miss a very good signal. And here's right here is a perfect example of this. Frederick said, I thought you just cut out because I said Frederick logged in and logged out. Well, if you missed that, Frederick was the one that pointed it out. And Frederick was like, I'm confused. That's a 4-hour chart. And he's right. I had it listed. Since I see Frederick jumped out and then jumped back in, I wanted to address that again for Frederick, who aptly pointed that out. And the reason I would have gone to the 4-hour chart is because I had to find some levels. That's why. But like I said, the reason I use a 2-hour chart to get back, because Frederick just got back online again, he must have jumped out and then jumped right back in, is, and let me go back to this for Frederick, because he pointed out very, very well. You see here, if I go with the 4-hour chart, you see there's nothing I see here. You see what I'm saying? Eventually you go, yeah, the market broke down. But if I go with a 2-hour chart, you see this long-legged doji, Frederick? You see what I'm saying? That's what I'm saying. I don't use a 4-hour chart. I did there. I mean, you're right, I had it up as a 4-hour chart because I might have to go back way further back days to try and find the support levels. And we talked about that earlier. I go, wow, if the dollar yen moves to let's say 97, I'm going to have to really go way back with data wise to find some levels. And at that point, I'm just trying to find levels. So I'll just throw I might even have to throw up a 4-hour in the meantime just to find the levels, and I'll revert back to the 2-hour. And a good point was here. You see how you get this long-legged doji, meaning the market has lost steam. It doesn't mean immediately the market can fall, but what it means is you look at the current direction, and the current direction was up, right? So when you get the long-legged doji, it means the bulls don't have control, and to a certain extent, the bears don't have control. But it finishes close to the middle of the range. Well, chances are then you can take a position going the opposite way, as the market probably needs to take a respite. And then you can see the wheels really fell off the caboose as it fell back. But that's what I'm saying. The 614 was going to be key. And as we start, I said the close. And if we start to fade away from that, that was a great opportunity for people to go and take that other side and able to go and benefit from that. And it was benefit to the tune of, like I said, anywhere close to around 50 pips. Now, Nitish sold it right there on that 630 that I was talking about, and he caught, 60 pips or something. But you have to be a little bit careful. It was okay to fade it from here just a few minutes ago, but you have to be careful is that why I was saying last night, hey, look, cover on your dips, because we just saw the story. With the dollar yen, is going to be like the biggest fall in 7 years or something like that, weekly fall. So all the chart jockeys are going to be long this thing. So they'll be buying on the dip. So that's what I'm saying. When you hit a specific level, fine, fade against it. If you try it again, I guess it wasn't too bad. I guess to fade it again and catch it again, and you might look at a shorter chart like on a 5-minute chart and caught some more pips. But I would be covering my shorts. I wouldn't be trying to hang on because I think it's going to work against you, because this market is going to be supported because all the chart jockeys, when they look at the weekly chart, it's going to be phenomenal. And they're going to be trying to buy this dip. So anyway, that's the scoop. That's the scoop on the dollar yen. So let's take a look at the euro. It's almost time for break. And, another good point when we were talking about the dollar yen, about don't being too quick to fade it when it initially got above 106. That was my point. 614 was key. Let it run higher. So I was thinking probably in the 620s, maybe a little bit higher. And why I pointed out, I go 630-ish. Well, this isn't an even number, but you saw the action above 1151 yesterday. And I was saying, hey, look, this thing can go to 1176, 1189. And I thought, if you want to scalp it, you can get short against this area. Okay? Well, we didn't even quite make it. I think we made it to 64, and I think Blake pointed out the 64 was a fib level. I don't remember what the fib level was, and I think I had it on my intraday charts, but I thought, okay, they'll probably make it to 72, and then I'll get short. Well, I actually got short just ahead, because when it came up here initially, it started back down. I thought, oh, you know what, maybe it's going to weaken again like it did. So when the market looked like it sat there, and it looked like it was going to try one more punch above the 50s, well, then I got long the 6E and said, okay, let me ride it. And then I exited as we went into the 50s. And then I thought, okay, well, if they make it up here, which I thought they would, they make it up here to 72, I'll add again on the short, and then I'll write it down. But we actually just didn't do it. So that's what I'm saying. I hung on to the short, and the short in the spot, I was already out of the long in the 6E. And to be quite honest, like I said, I didn't ride the thing down here. I didn't think they were going to fall all the way back to the 1110s. But last night in Asia, I actually, as the dollar yen was strengthening, I actually went long the euro, feeling, hey, look, it's going to find sentiment with this move, and it's going to run up. And then I even clipped some off, just scalping. But, the euro, it still looks like it doesn't want to sell off. So here's the deal, the way I look at it, is next week's the ECB. Now, the BOE, for some reason, I wouldn't say for some reason, but people thought they were going to cut yesterday. And when we were talking, I said, I don't think they're going to cut. It doesn't make any sense, because they won't get the most bang for the buck because the market's already expecting it. So this way, if they don't cut, they still have ammunition in the pocket, and then the market still will continue to expect, hey, they're going to go and cut. And so that was my take on that. Well, the thoughts are now that the ECB won't cut. So if the ECB won't cut, that'll give the euro an opportunity to rally. And so I think we're maintaining our bid. So it's that rally I want to be short. So like I was saying yesterday in one of the chat rooms, I think that it's going to have a underlying bid into that ECB meeting. Once we get past that ECB meeting, then I want to get short, and maybe that ECB meeting takes us up to this 12.16, maybe even a little bit further up to this 12.31. But that's why. So it's already time for the break, so hang on. So we'll catch our break here, and then we'll take a look at everything else. Yeah, Frederick says, thanks for going, I appreciate it. Hey, well, thanks, Frederick, for pointing out that, doggone it, that was a 4-hour chart. Here I'm talking about, I only use 4-hour charts, and there it is, big as Dallas, it was a 4-hour chart, but I'm glad you pointed it out, and I flipped it back to a 2-hour, but it's on the dollar yen. But that's what I'm saying, is it's all the same thing, except that when a market falls that far back, you'll see me sometimes put it on the gold chart, because if I use a TD Ameritrade one, it can only go back so far. But we'll catch on a little bit. We're taking our break right now. Okay, everybody, welcome back to the crossover. Frederick said, yeah, his internet cut out. That's what happened. Let me take a look at... So here we are with the euro, and as I said, my whole thinking was yesterday, not yesterday, I mean this week, and that's the way that I trade, is that, after that fabulous NFP, we should have been down here. Okay, so the idea, we should have been down here Monday or Tuesday. So the idea that the market just would not go down told me, hey, look, it's just, I don't want to say necessarily that it was sold out, but that the market simply did not want to move there. I don't think it was so much, as I said, it was sold out. This, when I look at the numbers and how the market traded ahead of the NFP, I thought, this market technically would be open to moving lower. The fact that it was, I don't want to say ignoring it, but that it was, trying to think of the right word, but it was, completely, just pushing that thought away or that action told me, hey, we're going to move higher. Now you saw a little bit of flurries above 11, it would try and bounce, come back down, but it just wasn't, going to move lower. And that was my thought when we moved up in here. Now, as we come into a Friday, and we've continued to move, someone was telling me this is after the market had come down. I was even surprised that it made it down into the single digits at 11. And they go, hey, look how far it's fallen. I go, well, yeah, it's fallen. I go, but it's still above 11. I mean, here's the deal. I mean, I used to go on and argue with myself as to, this was like, 3 years ago, because I was always bearish the euro, and I'd be like, Blake was really, he'd be killing the euro left and right. I'm not joking. And I'd be like, this euro is going to go lower. It can't go higher. This is crazy. It can't be at 131. It can't be at 132. This is crazy. It's going to go into the teens. And you know what? I was losing my ass. Okay? Because if you, like we talked about that last night in Asia, nobody gives, well, here's another thing. Don't worry about being right as far as how you see the market, as far as your opinion. Your opinion doesn't mean a damn thing, as does mine doesn't mean a damn thing. What matters is the price action. What you want to do is you want to, the way I look at it is I try to use my opinion in conjunction or in accordance with the price action. So, I was telling you all this early week, I go, hey, the euro doesn't want to go lower. It doesn't want to go lower. So it doesn't want to go lower. So I'm going with the price action of because I'm thinking this market after Friday should have been down here. The fact that that was the right word. It's repudiating these lower levels. That was my thought. I'm like, what the hell? This is crazy. We get a number, and I don't want to hear that bull, you know what? Oh, it was revised lower. The previous, kiss my, you know what? These people always have, they're a bunch of damn naysayers. You lose your ass if you listen to these losers. Look, that number was 300,000. The idea that that number was 300,000, and on Monday or Tuesday, we were down here, told me it was repudiating lower price action. Flat out, it was repudiating it. That's why I'm saying, hey, we're going to move higher. We're going to move higher. I go, not only is it repudiating it, anybody who's here says, no, we're going lower. I don't care. You don't know what you're talking about. We're going lower. Those people are going to just keep getting squeezed out. Now, we haven't taken off like a banshee to the upside, but we've kept on rallying higher. And so yesterday, a person was telling me, hey, look, we've come off. And that's the thing, you have to be open. That's the thing, you have to be open to price action, to anything can happen. So that's why I told the guy, yeah, we are lower. I go, I thought it was going to push up even higher in here. I mean, I caught some of the action here, but I told him, we're still above 111. That's all that matters. And on top of that, you're coming into a Friday. Now, they're not blasting away, but you have to figure, anybody that's short in here, they're all underwater. So some of those people might say, wow, you know what? I want to cover. I don't want to ride this thing. My take is, as we go into the ECB action next week, I don't think they're going to take any action. That's going to open the door for the euro to run even higher. And you know what? I'll be happy to be a seller up there. I think we might hang around for a little bit, and then we'll end up working lower again. So that's fine by me. You know what I'm saying? It's, I was playing it, basically in tune to the dollar yen last night. But you can't, I'm seeing is, we haven't broken out of a big area here. If you look at this overall, we haven't really broken out of anything yet. If you look at this whole big area, you could argue, well, we haven't really broken out of anything, really. Exactly. That's what I'm saying is you have, even though I'm a day trader scalper, I try to look at things in context of a little bit larger scale. So they still haven't busted out. So there's still a lot of people that are short, that they're not giving up the ship yet. Like I said, I like this area to go and short it. But right now, no, not right now. Not going into, and we're already into it, a Friday. And I know that there's a lot of people down here that are short, and they're wrong. What I'm saying is, I liked it up here for yesterday. Right now on a Friday, no. If you want to, I would consider taking some short action today if it got to 1189. I don't want no part of 1176. I don't care if it gets there and it falls back, whatever, I don't care. It's a Friday. You have to respect the action on Friday. I'm always telling y'all, watch out for Friday. I learned that from 50 pips. Watch out for Friday, because anybody that's on the wrong side of the market, they're all being taken out on a Friday. Because the market's going to punish those people, and it just makes sense. Because it just starts, and that's what, you see that a lot in FX. The market just starts pushing that direction. Because it knows it's got these people by the you-know-what. And it's going to keep on squeezing until they cry uncle. And the more it squeezes, then you have other people say, wow, looks like it's going to go that direction. And so they start adding on and plowing in, and it just pushes the momentum higher. So I'll be interested around 1189. I'll be doggone if I'm going to come in 1176. I don't give a doggone if it does pull back. I don't care. If it was another day, I would. Not on a Friday. Nope. I'll let them run them up, let them goose them up, because I know that because my overall perspective, even though I think the euro will eventually go lower, we've got the ECB next week. And I don't think the ECB is going to take any action. And if they don't take any action, that's going to spike up the euro. So why the hell am I going to be sitting here like an idiot? Okay, I'll sell it just above the highs and then get my ass run over. No, I'm not going to do that. I might take some action around 1189-ish. But my whole thinking is as we go into next week, because I don't like to hold over the weekend. And if we go into next week, it's going to be on the bid. And if the ECB doesn't take action, they're going to spook them up here. Then I'll say, you know what? Even though, I'm primarily a day trader scalper, I don't mind holding the euro over a few days in. If it wants to hold up in here, I'll be okay, fine, no problem. And then we'll probably see it come back down, I'll be covered. If it happens much faster and faster action, okay, I'll be jumping in and out of the market. That's why I like trading the euro. It just has a very nice way that it trades. Sometimes you get in a mess like this. I was calling this earlier this week, the summer doldrums. But each market has their own tendencies, just like this crazy doggone Aussie dollar. Remember I told you this thing, it goes from one extreme to the other. Sell, buy, trend, down, up, down, up. I'm just saying, each of these pairs has their own tendency. You have to, I can't believe it's up here. I thought it had already been down lower. I'm saying when this thing starts trending, I don't even know what the hell the Aussie dollar is doing up here. I really don't. But I know what the tendency of this frickin' pair. Once it gets going, it's like a runaway train. I'm saying it's like a train at the station. And if you think you're going to catch that train, you are crazy. You're going to have to run after that train because I don't even know, honestly, I don't even know what the hell it's doing up here. I thought it would restart. Well, I know now, right now, because of the Chinese data, but I can't believe it's still going. It hasn't even retraced very much. But the tendencies for the Aussie is once it gets going in one direction, it's hard to stop it. My point is it stays in very tight ranges, and that's not good for me. I like the action in the euro dollar. We came into a key area yesterday in the gold market here at 1323. You can see I had that highlighted in here. Actually went lower than I would have expected, but we've gotten a little bit of a bounce because the market was, somewhat overdone. And we've gotten a little bit of bounce. Not much of a bounce, but I really don't know what the hell gold's going to do right here. If I had to argue a point, I'd probably say, well, we'll probably move back up towards this 42-ish, and then we'll probably rest a little bit. Now, if the equities markets finish the week strong, which seems likely, and then next week, they start to tire out around Monday or Tuesday, and then we start to pull back, and maybe pull back even further. Then you can see the gold trying to spout its way up to 62.60. But for the most part, I just don't really see a lot of action happening in gold. I think this was a good area yesterday, this 1323, but it's still not doing a whole lot. I mean, if you think about it overall, in a bigger scheme, that's still a pretty good run there. Overall, about 13 bucks or something like that. But I just don't see a whole lot happening. But this 1323, I had that marked up from before. It's pretty key. We talked about it from way back here. And here's where lots of times I'll have to go with the 4-hour chart because I can only get so much data on the TD Ameritrade chart. So this is where I'll have to go back to the 4-hour so I get more data. And even then, I don't have enough. But this 1323 is pretty key. You can see it already here, but it goes back from way back here. So let's switch it back to 2-hour. So let's take a look at this cable. Well, what's his name was on the wires this morning, Haldane, and I don't, like I said, I don't trade the cables. I mean, I kind of keep track. But let me see some questions. Okay. Shirley sent me a question. Shirley, I'll go on and send you a message. Yeah, that's fine. Mario says I'm underwater, and he's underwater, and I guess he says silver. I don't think that's silver. It's $1.12. We'll take a look at silver real fast. I think he's talking about silver. You know what? We looked at silver. I'm not going to trade something like that because it's just wild as all get out. I have to trade a market that I feel like I can get my, even though I said I lean on the technicals, I have to trade a market that I feel like I can kind of wrap my head around it. Silver's just, I mean, if you only trade at technical, that's fine. I don't think he was talking about silver then. He must be talking about, oh, maybe he's talking about 1122 on the euro, I guess. Hang on, okay, I guess he was talking about the euros. Hang on. Let's go back here and go. Oh, so he must be talking about the euro here. He's sure he's down in the water at 1122. Yeah, I mean, see, these are key levels like this 35 and 51. Here's what I would do. Do what you want. That's not even a very good level to come in at 22, to be honest with you. Because I scalped a little bit in Asia. Here's what you want to do. I think maybe on these economic reports that are coming up, you might get lucky where they yank them down. And if they yank them down, I'd cover. And this 1114 is going to be key. That 1114, doggone it. Let's take a look at the symbol. You see how this 1114 is pretty key? And he moves to down there, and you can see here, it looks like right there, we may have, the low was like 1115 maybe. You see how they held it right there? So if you get lucky on these economic releases, you may want to put your stop like at 13, a limit at 13, if you want to just get out and not have to worry about it, and you may be able to get yourself in there. It might even dip as low as 11 or 10, and then you could cover. But like I said, going into a Friday, you got to be careful. You have to be careful. Last night, I even scalped short a little bit, and I knew, I go, hey, I got to be a little bit careful because I think eventually I'd get paid, but it could work against me where I'm like, why the hell did you go on short? And then we finish strong, and then let's say I would still own this short from down here, which really, I wasn't, 22s. I mean, I was over here like around, what was it? 38 or 40, I really don't remember right now. But anyway, I just scalped it for a little bit on the downside. And actually, the reason I don't remember is because I was using the 6E. I wasn't using the spot. So I traded them both, but because the way the dollar yen was trading, you're seeing the 6E like jump around. And the one that trades, and I'll give you an example, is you've got the 6E, then you've got the mini, and you got the micro. The mini jumps around a lot. I mean, like, you'll put your limit and everything else will be quiet, and you can put your limit like above the market, or if you're already in it, below, whatever, and it'll jump up real fast, like 4 pips. Like, it's stupid. Like, it's like, what I'm saying, because it's a little bit more thin. So you can, if you look at all three of them, I have all three of them up, and I'll look at the 6E, the micro, and the mini, and you can play those games sometimes with I don't want to go into that, but I'm just saying is you'll see these, I won't say inconsistencies, but you'll see these where they just get out of whack. And so the cash and the spot are trading okay. I mean, the cash and the 6E, but the mini is jumping around. You can catch yourself extra pips like that. But I'm just saying is it's not all the time. It's just like in quiet markets, you'll see it jump around. So that's what I'm saying is I was scalping short using that and taking advantage of these little jumps in the market. But anyway, getting back to the euro, is that my thought was, hey, I might be stuck owning this thing on the short side. I go, and then I'll have to ride it. So I was like, hey, be careful, don't get too overboard. And I was watching the dollar yen at the time, so it was basically a sentiment factor trade the way the euro was trading. But the euro hasn't sparked. I wouldn't say spark, hasn't spiked up enough to the thing that the way the dollar yen was trading. So even but I'm thinking of it as a risk on. So I think we can pop higher, but if we pop higher, I think that's why I'm cautious to say I would not short against the 76 now, because I think that it's going to just be like a squeeze. It's just going to be a constant squeeze higher. That's the thing. Once we move up, it's not going to be a two-way action trade, which I thought we could have seen yesterday. I mean, just back and forth. So the only thing you have going for it is you got these economic reports that are coming up, and you should see some good volatility. I think you could probably hit it one time. If we come past the 76 towards 89, you might be able to take it off one time. I mean, short it for a scalp and let it dip. But you got to be careful, because as we move in towards the latter part of the session, all things being equal, if we're holding up over here, they're just going to keep pushing higher. And the people that are short are just going to say, well, I'll put my stop here. I'll put my stop at 65. I'll put my stop at 73. And the market's just going to keep pushing higher and higher. I don't think it's going to be a scream higher other than the release of the report, whether it be retail sales. Then you can see a spike up, spike down. Blake should be coming on, so let me get ready for him. But that's my take on that.